Hi everybody, we hope everybody's spring is off to a great start. Hence the season, the tax season that we're in, we wanted to focus this video on tax planning and also retirement planning. Okay, so let's get into it. Up here I have three different circles, or three different buckets if you will, and what each bucket represents is the type of account most people have. Okay, so the three types of accounts most people have: they have a tax-free account, they have a tax-deferred account, and they have a taxable account. The differences between each of those is exactly, how it's taxed. The differences between how it's taxed. Okay, so when you hear tax-free, think Roth. So anytime you hear tax-free, think Roth IRA. The money in this account grows tax-free, as well as when you distribute the money, if you take money out of that account, it's all tax-free. Okay? The next type of account, think traditional IRA. The money in that account grows tax-deferred. Okay, but however, when you take the money out, distribute the money, it's going to be taxable at that point. It's going to get added to your income taxes. Okay? The third type of account is a taxable account. So if anybody has had CDs or bank accounts, you most likely have received a 1099 at the end of the year. Okay? That ultimately says, okay, here's the dividends or here's the interest that were paid to the account. And you have to pay taxes on whatever interest, dividends, or realized capital gains are for that account each year. Okay, so whatever that happens in that account in that year, you have to pay taxes on. Okay, so how does this relate to retirement planning? Well, when you enter into retirement, you might have Social Security turned on or about to turn on. You might have pensions. You might have annuities that are going to turn on and pay you income. But you might need additional income to align with your standard of living, your lifestyle. Okay, so where are you going to get that money from? Well, you're going to probably pull it from one of these three accounts that you have. So you might pull money out of Roth, a traditional IRA, or a taxable account. Okay. The problem that we see most folks having is most of their assets are in this tax-deferred account. Most of their assets have not been taxed yet. The problem that creates is your standard of living is now dictating your income tax bracket. So the more money you pull out of this account, the more you're going to be taxed, the more it's going to increase your tax rate for that given year. So you're going to be handcuffed based off what you're taking out of here. You're going to be handcuffed based off whatever your income tax bracket is. Okay, we want you to be in control of how much money you're taking out. So what's the solution? Well, what if we could manipulate and control and hopefully put more money into each of these buckets to provide us that control? Now we can manipulate, hey, let's take money out of this account, but yeah, you're starting to pay too much taxes, so now instead let's take distributions out of one of those accounts. Okay, now you're in control, rather than just being privy to taking assets out of here. So there's some certain strategies that we can help you implement to optimize your tax circumstance. Okay, this country's 34 trillion in debt, guys. Taxes are most likely not going up. Or I'm sorry, most likely not going down. Taxes are going to be going up. I know they're going up in 2025. They're probably going to be going up more. Now, in retirement, you might end up paying more taxes than you were when you were working if they continue to go up. So let's develop a strategy. We don't know what is going to happen to taxes in the future, but let's develop a strategy where it puts you in control of the distributions and allows you to have the lifestyle that you want to have as you enter into retirement. We're here to talk. We'd love to see you and develop a game plan and a strategy that makes most sense for you and aligns with your longer term objectives and needs. Feel free to reach out. We'll have you in the office and love to review with you. Again, hope everybody has a great spring. Looking forward to talking and seeing you soon. Thanks.